今日この動画ではマティ・グリーンスパンさんにインタビューをしてきた内容を皆さんに紹介したいと思います。で、これは後半です。で、このマティ・グリーンスパンさんっていうのが、面白い方でですね、前半の方で彼の人生について語ってもらってるんですけど、彼もともとおじいちゃんがビリオネアですごい裕福な家庭に育って、その影響もあって自分でペーパートレーディングをやり始めたと。それが13歳の時で、その後なぜかミュージシャンに転向した。でミュージックの学校に行ったんだけども、最終的に今はクアンタムエコノミクスっていう、会社の代表されていて、いろんなプロジェクトにアドバイスを与えたりとか、マーケットの分析をしたり、かなりクリプトの世界ではすごく有名で、ブルームバーグだったり CNBC だったりいろんなところにも出ている、そんな有名な方なんですけど、この動画でもすごくね、いろいろテクニカルアナリシスの考え方、ファンダメンタルアナリシスの考え方、トレードの基本とかね、なんかいろんなことをちょっとトピック触れてるので、ぜひ前半を見てからこっちに戻ってきて後半見ていただければと思います。前半はちなみに下のリンクから飛んで見れるので、ぜひコインクラブの方で見てみてください。それではどうぞ。Really interesting. I was watching this. Obviously, stock to flow model, right? Like PlanB, has been kind of like, and that's like a lot of people referring the 100K price action to be. But also, I was watching this interview from Willy Woo. So he was basically talking about this cycle is like he said this is the last cycle. Basically, like structure is so different. So basically, he's like, we don't know what's gonna happen. Maybe you're in that camp, probably. Like
I really respect Willy Woo. I was subscribed to his newsletter for a while until I realized the guy's always bullish. So even when if you're always predicting that a bull move is about to happen, I mean the market does go down sometimes. You know this, right? And PlanB. Our firm actually did extensive research on PlanB's model. It was requested by two anonymous clients, more or less at the same time, which I thought was just a striking coincidence. Both of which are large financial firms. And basically, the conclusion that we came to in both reports that were done by two independent analysts on my team, which were working separately, was that the stock to flow model is one that can always work in hindsight, meaning that if you fast forward time, whatever the price of Bitcoin is in 6 months from now, very likely it will fit within the stock to flow model. So then you could look at it in retrospect and say, oh yes, I was right, or the stock to flow model was right, because now look at the Bitcoin price. Because it doesn't actually say, okay, at this point, the price is going to be this point, but rather it kind of gives this range of outcomes. And especially according to the mathematics within his paper, we crunched the numbers and realized that this is a model that can be proven right given a very wide range of outcomes. Which is not to say it's wrong, but rather to say it's correct.
Yeah. I was reading about this article written by basically this idea put forward by head of I think one of the guy from Fidelity Investment, and I think his name is Julian something. And then he basically said that the stock to flow model we don't really consider the demand side of the factor. So then his prediction was a little bit lower. I think at least 2024. That's a fastest time frame that Bitcoin can hit 100K. So I was kind of curious. Well, fascinated by the so many different ideas just coming together and challenge each other. But as you said, we don't know what's gonna happen, right? Anything, maybe price a rally could happen. So what I was thinking, what could be the next catalyst for the next Bitcoin price action? What could potentially bring up to 100K? What would be the event that you might expect?
So thinking about Bitcoin's great rallies, 2013, 2017, some extent 2019 when it finally ended the crypto winter, and we could all, uh, get back to the idea that this is a real thing and not dead.
Yeah.
I think that the underlying theme is that there hasn't been a specific catalyst for the upswings, but rather the idea of digital scarcity, where people in at those times had woken up to the value of digital scarcity and had accumulated, and we saw in those times great supply and liquidity crunches where everybody wanted to buy and nobody wanted to sell.
Yeah.
And I think that the awareness, we'll never see another awareness bubble, right? Because everybody's already aware. There's nobody that's interested in money and doesn't know what Bitcoin is.
Yeah.
It's already, people understand the value of it. People understand the network aspect, the idea of transactional finality and settlement across borders in real time. They understand, the advantages that it has over the current remittance services like Western Union and MoneyGram.
Yeah.
So I don't think there's any, all of the low-hanging fruit as far as awareness is kind of taken hold. So I think that the next big upswing, Yusuke, I'd be very happy if we saw Bitcoin ranging from 30 to 60K for the next 12 months. That would not, I wouldn't even, that would be amazing for me. Right. And especially if I could see, a very clear low point and high point, because all I want to do is buy low and sell high.
Yeah.
Right. So that would be, and when things are moving very, very quickly, it's very difficult to know, where's the high point, where's the low point, especially if you look at these graphs and all of a sudden we're in new territory. You can't predict the next all-time high. If we're above, we're sitting at 73K, right? Try and guess the next all-time high. It's like throwing a dart in the dark. I mean, you can't know. So I prefer when things are a bit more predictable. But if you're asking where the next upswing might come from or downswing, I think that the only thing would be the accumulation and the lack of supply in the market, and meaning that it would get to a situation where many more people are accumulating than are selling, and it doesn't always. It's not necessarily a eventuality in my mind, right?
Yeah.
Especially since there's always people with built-in incentive to sell, given the way that Bitcoin is produced through mining, and especially lately where we see a lot of investment money flowing towards the mining industry. I mean, they're going to need to at some point, or they're going to want to probably cash out.
Right.
So, there's a balance that needs to be struck, and I think that we're right now kind of finding that balance.
I see. So I was thinking about this. I read the news about the Bitcoin ETF, and then some people so bullish on this. If this happens, then price is gonna rally. And I don't know about this. I can see that excitement come from, but also it's we all know it's in the process. So
right.
I wonder how can it be really I don't know, driver for the price action, because we're gonna see the SEC's a reaction maybe within this year.
Yeah.
What's your view on this?
Well, speculators are going to speculate, that's for sure.
Yeah.
And look, we've been speculating on a Bitcoin ETF since March 2017, when the Winklevoss twins' first proposal was rejected, and I remember doing an analysis at that time about it. And then we also saw that the Bitcoin futures markets that came online in late 2017, December of 2017, were late to the party. And some people actually theorize had a hand in the crypto winter and the crash that happened. Meaning that the futures markets allowed people to short Bitcoin for the first time freely. I don't know that the volumes there were significant enough to actually hold that theory. So we know that institutional interest in Bitcoin is extremely high. We know that from survey data and whatnot. But participation is very low. And a large part of the reason for participation being so low is that number one is the regulatory uncertainty, where people say, wait a second, why would I get involved in this if the, if the SEC is going to come and say, hey, why are you involved in this, right? Large financial institutions, they don't want to deal with that shit. They're like, we're making money over here. We don't need it. They feel very sated, and I'm sure in the profits that they're receiving on a regular day from their regular operations. So what do they care? Whereas a retail investor, like you and me, we're more likely to take a bit of a risk because, first of all, we don't really care about the regulation all that much. We don't have much to lose. So I think that having an ETF will assuage those concerns from those institutional investors and say, okay, well, the regulatory uncertainty isn't there anymore because we have a product that's approved by the SEC and nobody's going to ever come and say, hey, why are you holding it? Hey, this is a paper that authorizes us to hold it without any specific questions about it. So I think that can certainly help with institutional adoption. But on the other hand, there's a well-known principle in the markets, a well-known saying which is buy the rumor and sell the news.
Yep.
And therefore, we're probably going to get a lot of people speculating, the ETF is going to happen, and buying Bitcoin because they believe the ETF is going to happen, and then the ETF happens, and then let's say we don't get the massive institutional inflows that we're expecting on day one, and people could go, oh, wait a second, this ETF is a bunch of baloney, and then dump the price. I think that people with that kind of mindset, or whoever thinks that they're going to time it, maybe are being a bit foolish. Because they're missing the point, which is, the wealth accumulation over time and, investing rather than holding on to fiat money, which sinks by design. So, but the market is foolish very often.
Right. Yeah, the way I see is that, for example, like if institution really wants to get into Bitcoin, I mean, they have a way to, like, for example, Grayscale ETF and I mean Bitcoin, trust, right? So, but like, we don't really, they don't have like a premium right now. So it's the best time to really, go into that. But like, we don't see like significant companies or amount of money actually flowing into that fund as far as I know. So
they do have decent flows, I would say, but also, the other part of, why institutions are hesitant is education. They don't understand enough about it. So a guy like Scott Minerd, for example, who's the CIO of Guggenheim, he got into Bitcoin earlier this year. And this is a man who's in controlling a lot of money. For him, I'm quite certain he figured out how to buy some for himself, right? But for his fund, it's a bit more complicated, right? There's regulatory approvals that need to be made, and percentage of his portfolio that's allowed to be allocated. But then there's the idea of custody, right? And then you say for a financial institution, all of a sudden say, well, we need to now be a security, because cybersecurity is a big threat to everyone. But financial institutions, they don't feel that threat on a real basis because everything in their system is made up. Right, it's not real or tangible. So if a hacker breaks into their system and tries to steal, billions of dollars, it'd be like stealing a hologram. Right? You can't steal what doesn't exist. Which is why Bitcoin hacks are so permanent, because they reach in, they actually are able to grab something tangible and take it out. So whereas the financial institutions, they're very good at producing money and creating it. They don't have any kind of experience with custody, for example, and understanding how to hold on to that money. So I think that a Bitcoin ETF will give them that. But also, on the other hand, we also have U.S. Bank, which is America's fifth largest bank, which just announced yesterday that they're about to. And this is huge news for the United States and the adoption of Bitcoin in the world's strongest economy. So, like you said, yes and no. There are ways that large institutions, if they are very motivated to acquire Bitcoin, but how motivated are they? So I think that the ETF will help with some of the less low-hanging fruit. So help with the ones who are very lazy and they just need to flip the switch of a pinky for trillions of dollars to flow in that direction, right? And
that's
I
a good
think
point.
That. And we don't know how that's going to turn out until it happens.
I see. So I realize we're reaching the end of the time, but I wanted to kind of ask your opinion on the regulation, because we touched on a little bit. So this is something that I'm kind of the two things. One regulation, one like a U.S. kind of new law. So one concern is SEC might impose regulation on stablecoins. And now, like Gary Gensler mentioned that, like SEC, well, they're gonna consider like a regulation then in the future. And I was like, okay, so what is going to be? And it just, to me, like I can't really wrap my head around like what would be the regulation, the impact would be. And the second one is like an infrastructure bill in America. So that's like a controversial one, and I think that could have like profound impact on like a miners and like a stake pool operators and all that kind of stuff. So maybe could you touch on how concerned are you in those for those like new regulations and infrastructure bill that comes out from US?
Yeah. So I full transparency, I don't hold any stable coins.
Oh, you don't? Okay. Oh, okay. Yeah.
You never really understood the idea. You get all of the risk and none of the rewards. To me, it doesn't make much sense. But I do understand their value as far as a tool for the future.
Yeah.
When institutional adoption, especially when we're talking about no risk funds, right? Like people who are invested in bonds. Trying to take advantage of high lending rates within the DeFi market. I think that's the only way that they can do that is with stable coins. But to the point, we saw before Gary Gensler, there's a man who's a lot more powerful. He goes by the name Jay Powell or Jerome Powell, the chairman of the Federal Reserve.
Yeah,
we call him Jay Powell. He was the one who mentioned on a call with the central banker of Japan and the central banker of England and Europe, all on the same call. And that was like last week and a half ago. And he was the first one to call out, like raise a major alarm bell on stable coins, because he was like, well, they look exactly like money, but they're outside of the regulation of money that we normally regulate. And from my part, I'm sitting here going, well, why are they outside of the regulation? They actually are not. They shouldn't be, and I don't believe that they are, according to my understanding of regulation. And I have a financial trader's license, so I know a thing or two about regulation. They don't. They should be considered by the current laws as regular money. And if the Fed were to take that stance, they would have the same oversight that they do on regular money over stable coins. They can always launch a probe or an inquiry. as the SEC is doing right now for Circle, which makes complete sense.
Yeah.
So they have, but they're looking at them as a kind of a foreign entity, and I think that's incorrect. And the other part of the problem is China, right? Because China's already got their central bank digital currency figured out. They've been working on this since 2014, and Congress is very concerned about this because they feel like the U.S. dollar might actually lose out. So there's a simple solution, right? The U.S. dollar could lose its status as the global reserve currency. And the simple solution is to bring stable coins into the regulatory purview. So where does money originate? U.S. dollars originate. They don't originate for the large part at the Fed level. They don't originate at the central bank. Where does a dollar is born when somebody takes out a loan. When you go to your bank and say, hey, lend me $1 million. And they go, $1 million in your account.
Yeah.
That's where the money was actually born, was at the bank. And they might have, some reserves to cover that, but they actually created most of that money out of thin air. So if they're already creating it through a centralized database, which is at the branch level, right? They're actually creating it at the bank itself, at your local bank. So why does your local bank not have the power to create that money in digital form, right? In native digital form as a token, rather than through a centralized system? And in that way, you can also trace each dollar back to its point of origin. So let me ask you, why is one, Wells Fargo dollar worth the same as one JP Morgan dollar? That to me doesn't make any sense. That's basically what happened. That's what caused the Greek debt crisis in 2012, because one Greek euro is worth one German euro, and the Greek were going, hey, let me borrow as much as I can, please. And then the German's like, I'm not going to pay for that.
Yeah.
So this is exactly what happens on a commercial level within the United States. It's called contagion, where if Wells Fargo would see financial trouble, like they would, the price of their shares would crash, and they would have to declare bankruptcy. That would bring the entire system down because it's all the same dollar. So imagine a system now where a Wells Fargo dollar trades at 99.5 cents and a JP Morgan dollar trades at 101, right? And that's just a much healthier system where, for me and you on the street, I don't care if I'm paying you $10 if it's a Wells Fargo dollar or a JP Morgan dollar. Honestly, I don't. I'll just send you the $10 that we can, move on with our lives. But at an institutional level where you have trading and stuff like that, it just makes for a healthier system. And that's how we beat China. Not by the Federal Reserve coming in and making a CBDC. That doesn't help. Fed dollars at the central bank aren't the global reserve currency. They're not the ones that financial institutions in Hong Kong or Singapore are relying on. They're relying on the dollars that are already in the system.
Yeah.
So allowing the private sector to take the lead is what America is all about.
I like
that's
that.
That's what America does best.
Yeah.
It allows innovators to innovate and the government to regulate. And if they just take that adoption, and I know it's difficult for them because at some point they need to cede control, right? And the government ceding control of money, that would be, that's a very difficult thing for them to do, right? But if they do that, I think that would be better for America and better for the world and create a much stronger global economy.
Yeah, I totally agree. Yeah, let the innovator, let the free spirit, like an entrepreneurship spirit.
Yeah, don't give it to Mark Zuckerberg. They were right to block Libra. That would have made absolutely no sense. Honestly, don't give that power to Mark Zuckerberg. But the banks, Visa, financial institutions who are already there, the ones who are creating money. So let them tinker. They know how to manage their own risk.
Yeah, I like that. Awesome. And I actually we just realized it's already past the 10 and an hour. So yeah, I know I'm gonna I guess have to let you go soon. But yeah, I mean that was a lot of like a deep conversation that I learned a lot from.
Good.
Yeah, and thanks so much for your time today. And I'm sure like a lot of Japanese people really appreciate that because it's really, first of all, they don't have like access to like your insights like yours, right? So so please keep in touch and whenever you have time, like feel free to come and maybe educate us in what's going on.
Yeah, man. Yeah, it's an honor and a privilege. I really appreciate Japanese culture, and I hope to make it there one day.
Yeah, please. Yeah. Hopefully we're gonna see that.
Yeah, maybe after all this COVID nonsense is done.
Oh yeah. But I'm actually based in, London, but yeah. So
Oh yeah, I was invited to London November 10th. I don't think I'm gonna make it though. It's next week.
Okay.
Probably soon though. I'll be in London.
Yeah.
See you then.
Awesome. So thanks so much for your time, and then so let's keep in touch.
Yeah.
Yeah.
See you soon.
Thank you.
Cointelegraph. Like, subscribe, and hodl.